Hey, what's going on YouTube? I thought that I would like to do a bio for you guys. Even though it's not that interesting, I want you to see where I'm from and know who I traded with. Um, I was born in Alamogordo, New Mexico at the Air Force Base there. And I grew up in Brawley and El Centro, California, down near the Mexico border. I finished high school over there in Lake Elsinore in Riverside County, California. I started college at San Jose. Spent 4 years, transferred over to ASU, and finished out. I took my first personal finance class, I think about 1997. So not too long ago. I will be 42 here in March. So from that time, I took my personal finance class. I didn't know a damn thing about money. So I took that class, and the teacher always said to be careful with futures, be careful trading stocks, blah, 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 it's risky. And you know how parents tell you not to do something, you just want to do it more. So that's where I ended up. I graduated ASU with a small business degree in BIS, which is interdisciplinary studies, and I think my minor was sociology. By the time I got to ASU, I just tried to figure out how to get out of college right away. So when I finished college, I went straight into real estate because I was a small business person. I like to work for myself. So from there, when I started real estate, I was doing these open houses, sitting around bored. I would always start reading some kind of a stock book, some kind of a trading book, and I think the first book I ever had was from the School of New York Finance, and it was just like an introduction to technical analysis, basically. And there's a lot of those books. They're basically all the same books, all the same definitions, blah blah blah. But from there, I started to make some money, and so then I was looking around online. 1997. Not too much going on online except for AOL, Yahoo, and back in the day. So I found this dude. His name was Bill Panetta. I don't know if you guys ever heard about this guy. He ended up going to jail for fraud. So probably not the best person to ever learn technical analysis from, but he taught breakout trading. So that's where breakout trading came from. And just Google him, Bill Panetta. Something, I don't remember what he got indicted for, but it was for basically front-loading penny stocks and then selling it to the group that he had subscribers to. By the time he got indicted, I had already moved on, but probably spent 6-8 months with the guy. I actually met him for dinner one time in Phoenix, and a pretty nice guy, but he was a swindler. From there, I met in Bill Panetta's room this guy named Tony Forsythe. Now this is where I refined this T3 trading techniques. And Tony Forsythe had found me. I was just a kid, and Tony Forsythe probably in his 60s by now. And I found the T3s on eSignal, and I started fooling around with it, and then I figured out, oh yeah, Fibonacci numbers work great with this T3s. So I started using that, and then while I was in Bill Panetta's room, Tony Forsythe shows up and basically was angling to, because Tony Forsythe knew that Bill Panetta was a fraud. He couldn't outright say that to the group, but Tony Forsythe basically stole all the members from Bill Panetta, and he personally asked me to come join him because he was intrigued that I was in my early 20s playing around with Fibonacci and T3s, and no one else was using them. And so I followed Tony Forsythe. He and I traded together for probably another 3 years or so. And the thing is about Tony Forsythe is he had an uncle. Now his uncle was one of the first people in the West to bring over candlesticks. So I traded with this guy, and Tony Forsythe offered the service for like $1,500 to teach the 8 candlesticks that all you needed to know were these 8 formations and candlesticks. And if you can spot them, you can spot the reversals, and you have nothing to worry about. He's the one that taught me that the stock charts tell the story. He's the one that told me, pay attention to the news coming out because the chart's already telling the story. So, the adage goes, if you hear it in the news, you're already too late. And that's perfectly true. So I learned all my stuff from Tony Forsythe. I was working with the T3s, the exponential moving averages. Here's the 3, 5, and 8. And then these would be Tim Tilson. Tim Tilson is a mathematician, so it's the T3s. Tim Tilson is not a trader, so this application was adapted into the trading charts. You can get it on TradeStation. You can get it on a lot. eSignal has it. But what you do is you get these Tim Tilson exponential moving averages, 3, 5, and 8, and then you add a variable, which is the golden ratio. And let me see here. It's this ratio right here. What I would do is not the 1, but 0.618 right here. And I would add that to the deviation of each moving average. And I swear they're like magic. And the only thing that Tony Forsythe told me to start using with the T3s is this simple moving average 34. And that's what he told me to start using on a weekly chart. Tony Forsythe also made sure that I was always looking at the weekly charts before I would make any decisions on any stock considerations or trades. So that's where that all came from. That was over 10 years ago. I haven't talked to him. I know that he had his new trading group that was by subscription only. I never joined it, so I lost contact with Tony Forsythe. I know he lives in California somewhere on a farm. Just a very humble guy. And if anyone's heard about him, let me know. But I was known as the kid in the room. He was about 60, 65 years old at the time. So I was the youngest kid in the room, and Tony had invited me to come in for free. Everyone else was paid subscribers. So like I said, if anyone knows where that guy went, let me know, because I'd love to talk to him. I don't even know. I don't even know if he's still alive. But I give all my success to Tony Forsythe. This is the system that I traded with him and kind of revised it. And one of the revisions was moving from the bottoms of 3, 5, and 8s and going just 8, 13, and 34. And the reason being is the 3, 5, and 8 were just too soon of signals on a weekly chart. And the 8 and the 13 are the previous lows on a weekly chart that I want to get over. I want to definitely be over those moving averages, and I want to be in this little squeeze spot. And you can write programs, strategies to find stocks exactly in this spot. So that's what I did for a long time. So yeah, if you notice, I'm using all Fibonacci numbers. I use the golden ratio. I can't use all that on here on this investing.com platform, but if the YouTube channel gets more and more successful, I'll have to definitely get a trading program where I can trade with the T3s, because they're even more smooth than these. You see how the moves in the 8 are kind of up and down, up and down. When you add the T3s on it, it's exponentially smooth, like 6 times. So you get this long, rolling, smooth lines instead of the the weird. And then all I do on a weekly chart or on a daily is to watch the 8 cross over the 13 and look for the price pinching between the 8 and the 34 and look for a breakout. Because essentially you can add all your trend lines, but essentially these are our trend lines: previous lows, previous highs, support lines. So you don't have to. You can just look at a chart right away, and you can see that J curve coming to a bottom where price has to come up and touch its the elasticity on the stock has been pulled down so far, it has to pop and come back to its equilibrium. And I remember having a video on that elasticity of stocks. And that's all the indicators are. And if you were wondering why I don't use indicators, that's the reason. Because I can see the elasticity as I look at the stock price. You don't need indicators. They sure are helpful, but all they are is an indication. They're not meant to be confirmations. Confirmation is in price. Volume is a good indicator, but it's not the same as the other indicators that are on a scale of 1 to 100 or a 0 to 100. Like an RSI. Now, one indicator that I would use besides the volume is the OBV with a 21 Fibonacci number signal. And when 21 goes over the OBV, unbalanced volume indicator, that is a signal to start looking for price increase or decrease, whatever you're looking for. So that is one indicator. I believe professionals would tell you the same thing, OBV, but my personal preference is the 21 moving average on top of it. And I can't do that on here either. So unbalanced volume is very important. Volume is important, but I just don't use those because I'm trying to keep it simple. Trying to keep it really, really easy for anyone just to see what I'm doing. I mean, all I'm doing is looking for previous lows, breaking into previous lows, looking for an 8 cross over the 13 or the 34, and watching for price going above 34, coming back to the 34 on bullish retracements or on bearish retracements. And if we go on a daily, you probably see price goes over 34, always comes back, almost always. Now, if the stock is stronger, it won't hit the 34, it'll bounce straight up, but those are the really strong moves, and you might witness those sooner or later. Maybe I can find You can't really see. Well, you just look at the price movement over the 34. I mean, you had it bounce right here. It came down, closed above, but then gapped down. That is your first. That's your signal. You follow. It's a gap and run. That's what they call it, a gap and run. Let me see if I can find another action. I should change this back to a weekly so I can see. It's too hard to figure out on this stupid thing. Anyways, just look at the price action over the 34 each time. It either hits it as resistance, pops through as a whipsaw, hits it as resistance, pops through as a whipsaw, boom, boom. And then now, I mean, on silver, I'm guessing since things are just really heating up, the dollar's down and commodities are bouncing. And we're seeing that right now, right? We're seeing dollar coming down. We're seeing equities fall apart and commodities are on a bounce. And those bounces are coming, you know, in crude. Copper looks great on a weekly. Look at the reverse head and shoulders on copper. Now that's a true right shoulder. You get a previous high break on this candle, it's likely to hit the other side of the channel there. So watch for that little tidbit when I was looking around. But that's just about it. The purpose of these videos is just to keep you mindful of the long-term charts, keeping your following the trend, using just very simple technical analysis and candles and chart patterns to justify making your trade. There's a lot of, I was looking online and some guy, let me find him real quick. Alright, so this guy from Metastock, Stephen Bigelow, and I was just watching, and it's called he calls the T line the EMA 8, and I was like, he kept calling it the T line. I was, what the hell is the T line? T line what? What are you talking about? I've never even heard this guy, but he's obviously very popular, at least since 2012 on this video. But I was trading the EMA 8 on the T3s, you know, 1998, 99 during the dot-com bubble. I knew how valuable it was back then, so I don't know when this guy was started trading or saw how valuable the 8 is. But it doesn't matter. I'm just saying. My point is, I was trading with some of the guys that brought over the candlesticks and some of the guys that wrote the code to implement T3s on stock charts and, you know, these kind of people. So I was watching this guy and he's using the 200, the 50, and this stochastics. 1233 is his numbers on the stochastics, but he kept calling it a T line. I'm like, are you trying to brand this EMA 8 or something? I was like, whoa, I didn't know you can do that. But you can see him teaching this T line 8,
when they gap this way up,
and lots of good information, no doubt. But it's way too complicated. He's got all this stuff going on, and you're like, what the hell's going on here? So basically what I'm saying is I like to keep it simple. I got 3 lines on the chart and a bunch of candlesticks on a longer term chart. Always start with a long term and break it down. I mean, You see that J curve coming in. You see it, you see it. You know something's going to happen sooner or later. And you can see the waves. There's a lot of Elliott wave people out there. I didn't never buy into it. It's too complicated to figure out, and too many variables. It's like, what are you talking about? So I hope you guys agree. This is very simple. We're watching long-term charts, price action over the 34. Your best buy is on a retracement after the price crosses the 34. I mean, just keep it like that. You can find stocks all day long. Keep it simple. Boom, boom, boom. So, just to give you a little bio, guys, just to let you know who I am. I now live in Arizona in the mountains in a small town. I decided, I haven't traded in 3.5 years. So I decided, I'm going to just start doing some interpretations on stock charts on YouTube. So I'm glad you guys like it. I'm glad you're learning something. Don't make this too complicated. I'm not a professional, so that's my disclaimer. I don't have any money in the stocks. That's my other disclaimer. If you guys like these videos, I'll keep doing them, and sooner or later I'll get some money into the stock market. I'm not going to do it now because everything's falling apart, obviously. But there you have it. I'm Russell Hunt. I live in Arizona. See ya.